Maximus Analysis here for February 9th, 2016, just showing you the big picture of where I want them to hold in order for it not to be confirmed as a bear market. A lot of people are saying that we're in one now, and we look, I mean, as far as downward slope and 200-day moving average, but remember, these things are lagging, excuse me. So I just want to see if they're going to hold above this level right here. Just kind of squinting your eyes and look at it. So let's look at the daily time frame to really get into what's going on. And in regards to the ES, we want to see if it's going to hold or break above this 1871 level, which we've been talking about for weeks now. And you could see that it's around this area here. 1871, they need to get it back above to see if there's any type of strength. A close for this week is going to be critical. Again, sometimes when you're looking at chop like this, I always suggest to look at a higher time frame like the weekly. The weekly won't be as crowded, and it will give you some sort of clarity regarding such chop in regards to looking at this chart, you could say, okay, we have a higher bottom that we need to hold this 1806 area, and you can see that break above there would nullify the sell signal of 1871, and we could continue and potentially go up to the 1950 area or the 1870 area. Now this candle is not closed, so again, the worst case scenario that we don't want is a close below for the weekly candle 1806. So let's just continue to look at these levels and kind of take it from there. So again, intraday, they still held that 1828 area that we had from yesterday, and we'll continue to see how they behave overnight. Okay, we want to see them hold above, let's say, this 1830 area, and see how things go into tomorrow's Fed meeting as well. So again, it's just an indecision day. This is futures, so we'll just look at it accordingly, and we have to react. Again, this is the environment for more aggressive type of trading because things can be moving very, very quickly, very fast. And if you don't like that type of trading, cash is a position as well. So that's fine too. We need a recapture of 4100 for the NQ. It is not looking good at all. Again, this could really set up for a lot of downward potential, moving down maybe another 500 points from here, which is would break it around the 3800 area, and it's not that far from it. So, but things have been moving very volatile, and again, we want to see them recapture that 4100 level, 4100 level with some type of strength, or everything is going to be sell the rips accordingly. YM, we want to see a close above the 16100 level. Again, they need to be holding this. Right now, we're going to treat it as a bear flag unless they get back above the 16100 level, and of course get above the 16400 levels, potentially going to the 16750 area as well. CL continued to break down, and again breaking under breaking under the 29 area was more like, okay, they might be definitely headed. I mean, the last stop they have is the previous lows, was they got really, really close to, and then they go to 25, so it's not something that should be discounted. And again, 18 I'm not sure about, but 25 looks like an immediate. I mean, it's only $3 from it, and if you know crude, that could happen tomorrow. Today's range, just to put things in perspective, today's range was $2.87. So again, a day could do that. But we're still moving down from this original sell signal of 32 bucks. So they have to recapture the $31, $32 range for some bull side potential to potentially say, okay, is this going to be a double bottom for some retracement to the upside? I don't see any momentum slowing down as yet, but again, it all changes based on candles and based on price moving, how strong things are, and kind of go from there. So let's look at some names. Again, Apple, we can see that we're just, we're still in very, very, I mean, they got to get at least above this $100 mark on the bull side. And again, trading the rip to the upside hasn't been the most convenient because, again, they've had some gap ups and really trapped a lot of longs. But you had your line in the sand from August, so we'll see if it still holds. You have Google. Again, this is another day that I'm telling, reason why I'm saying that this is a day for some more aggressive type of trading is because it gave a clear buy signal today and faded it all back. Again, if you're looking on a 30-minute, at least you could have had at least some stops in and stuff, because there's a lot of people that might have gone long, or even looking at the 15-minute for this Google chart, a lot of people might have gone long, and then at least have your stop at break even or something like that, or maybe roll it up to protect some of these profits. And now it's just kind of in no man's land. And based on the intraday action, you do not want to see a break of this close. A break of this close would not be good. Again, we're getting back to one of the significant areas before the gap on earnings, so we want to see them hold this area. We want to see them hold this 1875 area if you're in the bull camp. But again, we have to see who's going to get trapped. So again, it's more like a lot of people might see this single day. I'm not a person that likes to trade one bar pullbacks, but again, a break above this high could squeeze a lot of people that might have went short today. So you got to be fairly nimble. Now we have a $9 move back down for LinkedIn. So even though it's dropped $100, it still has a lot of I mean, I don't know where the bottom is, and I wouldn't tell anybody that I like to try to guess it. Let it stick it, stick a fork in the ground and then trade it accordingly. Be willing to miss trading the bottom if something has a lot of momentum to the downside. You can always get a higher low to trade off of. That probably give you a lot less risk as well. Price line gave a slight buy signal today and closed near the highs, but still, again, it's more to look if this is just something that is going to be, I mean, it has to clear above this 1,000, at least this 1150 area to look entertaining at least. Tesla, again, same thing, gave a buy signal, and let me just erase that. Gave a buy signal and then just gave it all back. So it's at an oversold territory, but that doesn't mean that you blindly go in and out. So this is, again, why I said aggressive trading would probably be more in tune with how things are going right now, because they're immediately giving buy signals. And if you look at today's action on the ES on a smaller time frame, maybe like a 15 or hourly, you can see that it wasn't that tradable. It wasn't as clean. Again, hindsight is 20/20, so again, it always will look clean after the fact. But this is not a clean range to be trading in. It's it's ping pong in between these levels of 1855 and 1828. So let's see it give us some type of direction. If they're coiling up, where are they coiling to? The trend obviously on the 60-minute is down, but let's see if they're at least going to pop up to, again, this 1868 level tomorrow and give us a short opportunity if they get back to oversold conditions. And oversold conditions for me and for you might be two different things, but let's not get overly aggressive. And even if you're looking at how did I pick that number, you can see that this was prior support that was tapped numerous times on this 71 area, and just going down to a smaller time frame, so you can kind of see that it was tapped, and broke. So now, again, the old saying of what was support now comes resistance. Let's look and see how high they go if they get a pullback and what type of volume strength they have. So take care, and again, cash is always as position. Take care.